Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Russell Rhoads, head of research at EQDerivatives, to discuss trends in the Nasdaq-100, the Nasdaq-100 Volatility Index, also known as VOLQ, and what we're seeing going in to earnings. Russell, it's great to see you as always. We made it to the second quarter. We got past April Fools. Now we're starting to get into a very seasonal part of the year, and it's not just with weather.
No, it's not just with weather. And as you mentioned, we are going into earnings season. And typically when you're talking about broad-based volatility indexes, they do nothing but really react to what's going on in the market. But VOLQ is a little bit different in that respect because it does adjust for earnings season. And earnings season for the big names in the Nasdaq is going to kick off in the next 3 to 4 weeks, I believe.
So is it behaving typically for what it should this time of year? We hear so much about the VIX that it's going into, it's at 17 right now, and it looks like it could be going even a little bit lower, and we're going back to that normal vol regime. Is VOLQ exemplifying any of this?
Well, VOLQ actually, and I'm going to step back to the previous quarter. Typically, in February and March, on average, since 2014 through 2020, VOLQ's actually been at a discount to VIX, and that's just a function of it being an at-the-money implied volatility indicator versus the strip, things that we've gone through before. It was at quite a premium, and I'm certain that that's related to the underperformance of the Nasdaq-100 in the first quarter, which, yeah, you can't get too upset over that when you take a look at how much it outperformed over 2020. But that underperformance, continued concern about stocks that may be negatively impacted when we have a full reopening. I think that anomaly has made it behave a little bit differently than what we're used to in the past. And then the spread's been narrowing between VOLQ and VIX. I assume as we get closer to earnings, if we follow previous history, that should widen back out some.
So are there any clues from VOLQ in terms of volatility ahead? Do they expect a smooth earnings season, and then if we start to think about the summer months?
It's kind of funny. I have done some testing on VOLQ and how well NASDAQ earnings have gone. And it's not necessarily a positive or a negative indicator, but it has done a pretty good job of being a little bit more elevated when we've gotten some of the bigger moves out of the bigger NASDAQ components. And that's where we are right now. Now, that can change from day to day. And again, I think some of that excess spread over VIX can be attributed to the NASDAQ-100 performance. But as it starts to look forward, I think it trended in a little bit, but I do think it's going to hold where it is now and probably widen out versus VIX over the next 2 to 3 weeks.
So then, Russ, to wrap up here, it feels as if that chop that we experienced, especially towards the end of the first quarter of this year, it looks like it's going to not be quite as choppy.
No, I think it's something that's gonna start to smooth itself out, and definitely I think the opening versus non-opening stocks, those sorts of things. I think the anticipation around all of that is already in all of the various stocks that are going to be impacted by that, and unless we get a change on the trajectory that we're on right now, we should be fine.
All right, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.